What do you make of this week and how we're setting up, given earnings, economic data at the end of the week? We've got lots ahead of us.
Yeah, earnings are going to be important. But what's interesting is the weekend talk shows were consumed with the impeachment deal, and it doesn't really seem to have a major market impact. I think the only way we've seen it as an impact is when these hearings get partisan and acrimonious. It makes the traders feel the chances of getting infrastructure, the chances of getting anything else done are almost nil. But the key that is all-encompassing remains the China trade. I mean, overnight, for example, they put out a statement that they will have a Chinese delegate here in a couple of weeks, and the futures turned around. So the obsession remains with the China trade rather than with impeachment and politics.
And you feel like that's running through the bonds? I mean, it seems like, we also got decent economic data out of China. I mean, one number firmer than expected. And then, bond yields able to lift, and that seems to set the tone.
Yeah, no, I think we're going to see movement in bonds again. I don't think we've seen the low yields yet.
No.
I think you may see them at year end, and we'll see. And I think this little quote-unquote problem with the plumbing may begin to influence the Fed to a degree, because if they have to keep loosening up in the short-term money, that may or may not take away a rate cut. They can say, hey, look, we fattened up the balance sheet here. Well, I guess we don't need the rate cut. So I don't think the markets are focused on that yet, but I would be keeping an eye on it.
You're still looking for one more cut, or you think even that's a risk?
I think that is a mild risk. I think they should. But I think the markets may be seeing it as a mild risk in about a couple of weeks. I don't think anybody's focused on the repo thing as much as they should, and we'll see if that picks up.